We move on now to the U.S. market. A slew of news has hit the global markets and particularly, of course, the U.S. with a hurricane hitting the East Coast and plunge in the British pound around 8 p.m. New York time. And of course, the most crucial piece of economic data, the U.S. employment report. Let's now bring in my colleague in New York City, Jill Maladrino, to tell us more. Hello, Jill. Glad to have you on the show. I'm happy you are safe. The hurricane didn't get to you.
No, it looks like we are going to get lucky in the U.S. as the hurricane should take a right turn off of the East Coast, but we'll take a look at that in just a minute and see how some stocks can be impacted. But looking at futures real quick, we can see on the instant reaction to the jobs number, we got 156 jobs. That was versus consensus of 169,000 jobs. Taking a look at it now, we had an extreme pop in the futures. We saw that in gold as well. Now, this is the key here. The markets have pulled back in because it's lending to more confusion to traders. ISM data was very strong this week on Wednesday. We saw a record-breaking number. A growing number of Feds have argued for a rate hike before the year ends as conditions in the labor market improve and inflation inches towards the central bank's 2% target. This was good for financial stocks earlier in the week because higher rates mean higher margins on the balance sheet. Traders are now pricing in a 65% chance of a rate hike in December, according to the CME Group's Fed Watch tool. In addition to jobs, traders are also closely watching the move in the dollar and commodities. Now, gold fell for a fifth day straight. This was as of Thursday night, while oil closed at 4-month highs. The other big story that remains is the potential impact of Hurricane Matthew it's right on the Florida coast now. We should see it move up to the Carolinas. If you're not familiar with the U.S. East Coast, it should be pushing out to the right into the Atlantic probably by Monday night. So what we want to look at here is it's now a Category 3 as it's going to the Carolinas. Stocks to watch include our insurance ETFs like the iShares U.S. Insurance. It's an insurance ETF weighted towards companies like AIG, Chubb, MetLife, Prudential, Travelers, Aflac, Allstate, and Progressive. These could be impacted as insurance claims start to come through. Now, on the flip side, housing and generative-related stocks like Home Depot, Lowe's, USG, Generac, and Briggs & Stratton, they may benefit from an uptick before and after the storm as people shop for goods to repair their homes.
Now, of course, we also saw the pound's plunge badly. Perhaps, would you say discussions about Brexit have warmed up again?
Just like the guest before me said, it looks like it was a flash crash. Fat finger is what traders call it when a trader might make a mistake and overbuy or oversell shares. The pound plunged as much as 6.1% in early Asian trading. This was the biggest decline that we've seen since the day after the UK's Brexit referendum result was announced. That brought it to a fresh 31-year low. The Financial Times reported following the movement last night that the French president said the UK must suffer the consequences of leaving the EU in order to save the trading bloc from an existential crisis. Now, the drop in the pound versus the dollar could be due to an erroneous error, like I said, a fat finger, and flows related to this error triggers what's called stop losses on options or on the currency itself. The reason why we think that might have happened, dollar yen and euro dollar, they're not moving as much, and this is what analysts seem to think is the case. Now, leaving the EU has been the main topic at the ruling Conservative Party's annual conference this week, where UK Prime Minister Theresa May seemingly moved closer toward a so-called hard Brexit that would restrict access to the European Union's single market so that the government can control immigration. That's really what the big issue is here. Sterling has tumbled since May's speech on Sunday. That accelerated losses as she was said to take the view that financial services would get no special favors in EU exit talks. But last night, that movement was purely algorithmic and really between the trading machines.
Now, the earnings calendar has been slow over the past several weeks. Do you think this is the quiet before the storm? And what trends do you expect to emerge?
To say that the last quarter of the year will be historic in the U.S. is an understatement because we have a widely debated national election, potential interest rate hike, looks like it will be December, and the key retail shopping season. Next week, the unofficial start of earnings season will kick in on October 11th with Alcoa, but more importantly, the big banks like Goldman Sachs and JP Morgan will be reporting on Friday and into the following week. You want to listen to what they have to say about interest rate hike expectations and how it will impact the business and balance sheet. Recall that higher interest rates are good for bank margins, and we've been operating in a sub 1% environment in the U.S. for nearly 10 years. I would also listen to see what corporate management has to say about the upcoming national election, particularly in the financial and healthcare sectors. Hillary Clinton has been very clear that she's going to crack down on banking sales practices and healthcare costs, so those two sectors will be the most widely watched.
Well, Jill, I guess I have to let you go. It must be very cold out there, Jill. Go grab yourself a cup of coffee and make sure you stay safe. Thank you so much for your time.
Thank you very much. Have a great weekend.
And you too, Jill. Right, moving on now, the World Bank has cut its 2016-2017 growth forecast for Uganda to 5.5% from 5.9%, citing the impact of South Sudan's conflict on its exports and sluggish investments due to slower economic activities globally. South Sudan is one of Uganda's major export markets, but roads between the two countries have been unsafe since an eruption of violence in South Sudan in July. However, a rebound in activity in the construction sector, driven by aggressive public infrastructure investments, will offset the effects of a weak external sector and return growth to above 6% in the 2017-2018 July to June fiscal year, the bank said in an email response to some questions thrown to them. We'll take a quick break now. When we return, we'll look at the Guinness-Nigeria Diageo tie-up. Do stay with us.